What's going on, everyone? Welcome to another episode of The Remote Real Estate Investor. My name is Michael Album, and today with me I have Chris Meunier, who's talking to us about what it's like to convert your primary into a rental and how he's scaling out of state and what that looks like. So let's get into it. Hey, Chris, what's going on, man? Thanks so much for coming on and hanging out with me. I appreciate you.
Yeah, thanks for having me, Michael.
No, my pleasure. So, I obviously know you and we have a relationship. And so I would love if you could just give everyone listening a background of who you are and how you got started in real estate.
Sure. So my name is Chris. My wife and I we've been married about almost 10 years now. And I work my day job at Google. My wife's she's an entrepreneur, personal finance coach, which is really exciting. So we're both very passionate about helping people with their finances and real estate as well. And going back a bit, I grew up in a family that was very focused on real estate and had a lot of family members who work in real estate. My dad was an agent. My brother's an agent. Uncles and aunts who've done, home inspections and things like that.
Yeah.
So I was surrounded by all of that growing up. Bought my first property back in 2009, a condo in the San Jose area of California, and did whatever it took to get in there. I put 3% down because I knew that the earlier I could get in and get my foot in the door, that it would be well worth it. And sure enough, it was, and I still have that property as a rental. And then I think from there, we've really just kind of kept building from there and looked for ways to not just focus on our primary residence, but look for ways out of state as well to build our real estate portfolio. So that's kind of a little bit of background on where we've come from and where we've gotten to today.
Awesome. And just with the goal of being fully transparent, you are a Roofstock Academy member, right?
Yeah. We've been for, I think, a year or two now. We've been with the Academy and have really enjoyed it and gotten a lot of value out of the courses. I'm a program manager in my day job, so I built a lot of Evernote sheets and took copious notes and action items and things like that. So we've really gotten a lot of value out of the Academy and used it to really analyze properties differently and build out our 10-year plan and things like that. We've told other people about it too. So yeah, we're big fans.
Awesome. And how much should I pay you to say that?
We'll figure that out later.
Okay. You'll send me an invoice.
Yeah.
All right. Awesome. So I'm curious, Chris, for you and your wife, what was it? And maybe it was just your family kind of being bugs in your ear, but what was it about real estate that attracted you to investing in the beginning? Because I think people listening to this could say, oh, well, he got started in 2009, prices were at the bottom, so he just got lucky. I don't think that's the case. You've done a lot since then, but what was it about real estate that initially attracted you?
For me, for a while, it's, I think a few things. One is about just the fundamentals of real estate that I've learned over time. And I think going back to 2009, it was really about finding a primary residence first and foremost, but knowing the power of buying and holding in the Bay Area and knowing what that could do. So at the time I did a lot of research on the tax benefits and things like that, but not so much as an investor, more as a primary owner. So I think that was just understanding the power of from an investment standpoint of what you could achieve through that. And the second thing is diversification. So my wife and I even now look at, how much do we have in our real estate portfolio? How much do we have in the stock market? How much do we have in other types of investment vehicles? Diversifying, especially when inflation is going crazy and the stock market's going up and down, I think is really important. Mm-hmm. So that's also been in the back of our minds as we've thought about what can real estate do for us? I've always seen it as a way to build long-term wealth. And especially now that we have two small children, leaving a legacy and having something that can carry on beyond our time, beyond just inheriting some amount of money, I think is something that's really important to us too. We have, just an example on my wife's side, her family, some of them live in the Bay Area and own an apartment, a small apartment complex that her aunt bought many decades ago. And now it allows them to and her cousins, to live differently because she made that investment long ago and is able to support the family in different ways.
Yeah.
So things like that really speak to me, I think, and show the power of what real estate can do for a family, an extended family.
Love it. Love it. And for you and your wife, Chris, when you first started out, you had some goals in mind. And so now you've been on this journey for over a decade. What does done look like for the two of you and for your family?
We go back and forth on that, honestly. Like there was a time where we said, okay, like let's build out our 10-year plan and figure out like how do we get, like 50, 70K of passive income a year from real estate. Mm-hmm. Do we want to get 100K? Is that even feasible? Do we need that? I think we both work day jobs, and we want our goal has always been we want to supplement what we will get from retirement, and look for ways maybe to retire earlier, and also, like I said a minute ago, just provide kind of that long-term nest egg for us and for our children eventually. But having done that math, I think we've landed on like somewhere between 5 to 10 properties out of state, either single family rentals or duplexes or maybe triplex, something like that. Okay. But the reason being is that we can get to some amount of stable annual income through those properties, combine that with like 401k, IRA income, and get to this net amount that will allow us to live comfortably in retirement. Those numbers are, they're kind of made up at this point. We don't really know what amount we'll need to live on, and we don't really know how all of our rental properties will perform down the road. So we're trying to bake in some margin of error there and say, okay, yeah, 5 to 10 instead of just 10, or maybe by the time I turn 50 or something like that, I won't want to manage 10 properties, or I won't want to have that mental burden of figuring out which ones are doing well or not doing well. At this point, I think I would enjoy that, but it's hard to know, right? Like there's the time aspect that I think is playing a bigger role in my mind now. About how much time do I want to put in now versus when I'm retired. It sounds really enticing to put time in later and kind of look for deals and look for ways to optimize the portfolio and things like that. So yeah, like more tactically speaking, like our original goal was to go from like 1 property to 2 to 3 roughly every year. So right now we have 3. And we intend to buy another one this year, maybe next year. And then we go to 5 at some point after that, maybe the next year. But the pace kind of depends, of course, on our financial situation. But that's kind of how we're playing it right now, is at least maybe get to 5 and then reassess how things look and what our financial situation is and our job situation too.
I love that, Chris. I think we've had so many people on the podcast, and I talk to so many investors that are, I want to get to 100 tomorrow. I'll do it as fast as I can, as quickly as possible. And, that might work for some people, but I think for others, you really need to take a more strategic and slow and steady approach, which is what it sounds like you are doing exactly.
Yeah. And I think we've, when thinking about how could folks starting off benefit from hearing like tips or feedback from others, I think what's really resonated with us is just being extremely thoughtful about what your goals are and what you want to do. Because like I said, my wife, she talks to a lot of people who are working to get their finances in order. They bring up real estate a lot. They say, "Oh, I hear real estate. I need to own some. Like my family's telling me I need to own real estate." And Jessica says, "Why?" And then they say, "Well, I don't know. Like I just heard like I should be owning real estate somehow." And it kind of just gets to the basics. Like, all right, what are you trying to achieve? Some people want to do buy and hold, and they can skip the cash flow every month. Some people can't. Some people need to live off that cash flow. Some people haven't maybe done the math to know if they can put a chunk of money and lock it up in real estate for a while. So just being very thoughtful about that and having concrete goals, I think it sounds so obvious, but I think it's so critical. And then once you have that goal or those goals, like stepping back and making a plan and because my wife and I think very like project management oriented, like building out milestones throughout a year. Like if you want to buy your first property or even make your first offer, like this year, let's say, put down some some steps you can take, like whether it's sign up for Roofstock Academy or educate yourself in other ways or learn about certain neighborhoods and then get pre-qualified and then get, talk to PM, property managers, things like that. That's what helped us a lot, is really putting down those stepping stones along the way to the point where we could feel like, all right, like maybe we can do this. Maybe we can buy our first out-of-state investment.
Yeah.
And it takes a while to get to that point sometimes, and that's okay.
And Chris, what would you share with folks now, having been on the other side, of how do you go from 0 to 1? How do you know when you're either mentally or physically prepared? Because you could always listen to one more podcast or read one more book or take one more course.
Yeah.
What does that look like?
I think it's, there's always hesitation. I think I would dare compare it to like having a kid, maybe in a way.
Okay.
Like
they're just as expensive.
You can do, yeah, right. You can do all the studying and preparation you want. You'll never be fully ready, and there's always going to be unexpected things that happen. So, as an example, when we bought our first property, we landed on Indianapolis more specifically. Now, why did we land there? We did a lot of research on areas that were seeing population growth and strong rent growth, and affordability was within our range of, we were targeting somewhere around 100 to 120K for our first property. And Indianapolis seemed great. But it took a while to really build up the confidence to make an offer, because it first, I think, is getting over the hurdle of buying something that you don't see. At least for us, that was a big hurdle to get over. And because the other property we manage locally is only 30 minutes from our house, and we can drive there when we need to. But this was a whole different beast, right? It's like going on eBay and buying something, then you hope it shows up in a few weeks.
You hope it's real, yeah.
Yeah. So I think that was a mental hurdle to get over. But we spent a lot of time researching Roofstock and other competitors and learning and actually talking to folks who had used it and getting feedback that way too. So that helped build our confidence. And then on the financials too, we took a lot of what Roofstock offered in terms of estimates for fees and maintenance costs, things like that, and we just kind of put it to the max and very conservative in making sure that we were really planning for, okay, if we don't get, a tenant in place for a month, or 2 months, what would happen? Would we still cash flow? Would we be okay if we didn't? And just mapping out all the what ifs. I think a really good tip that my wife reminded me of was have somebody who's willing to push back on your assumptions and to question what you're doing, whether it's someone like you, Michael, a coach, or your spouse. In my case, I tended to be more optimistic and glass half full. Yeah, and she was the opposite. She would say, what about tornadoes, hurricanes? Do we have enough insurance to cover that? What about, if the tenant just doesn't show up one day, Roofstock says somebody's there, nobody's there, things like that. And it's good to have somebody to check your assumptions. So those are some things that helped us feel confident in feeling, all right, we can do this. Let's give it a shot. Let's make our attempt. And we had made a couple offers that didn't work out the first time before we got our Indiana property. And it was a good learning experience. We figured out how to make a stronger offer, how to look for properties that maybe were not going to be as competitive as some that everybody wanted, for example.
Mm-hmm.
Yeah.
That's great, Chris. So Chris, now that you and Jessica have owned that Indianapolis property for some time, how is it actually performing? Is it more towards where your assumptions were or more towards where she was?
So yeah, that property it's done well. We've actually had the same tenant there for, I think we've had the property now almost 3 years or so. It's been the same tenant in place and that was there when we purchased. So we recently raised the rent for the first time. The first time around, we did not raise the rent due to COVID. And this past, I think it was November actually, that we did a small rent increase that was successful. And so we're really happy about that. There's been a few maintenance issues, nothing significant. But kind of going back to the point about not being able to see the house, the property manager has, when they've gone in to do maintenance, they've made comments back to me about like, oh, there's cleanliness issues, or there's like stuff everywhere, and it makes me nervous. It makes me nervous that like there's probably other stuff going on in the house that nobody knows about. They might, the property manager said they have possibly like an illegal dog in there and they're not supposed to have pets and like things like that, but they're not making a big fuss about it. So part of me worries that when this tenant leaves and we have to like update the property, like we're going to find stuff in there that we didn't expect.
Yeah.
But
for now we're here.
yeah. Because it's so hard during COVID, especially like the tenants, they say, oh, I don't want anybody coming in. Like you can't do an inspection on the house. So very limited opportunities to like really assess what's happening. The checks keep coming though, and they're paying and they're not complaining. So part of me is like you said, like keep our blinders on, just keep going forward. So that the property is doing well and it's appreciated substantially. I get like cold calls and texts like every week from people. I don't know how they're getting my information, but they're finding it and they're saying, hey, like we're looking to buy a property in Indiana. Like, are you open to it? Like all cash, like come in, like we'll give it to you right away.
Yeah. I just got one yesterday too. It's so funny you mentioned that.
Oh my God. Oh, the strangest thing, even my brother, I have 3 younger brothers. One of my brothers gets texts about our property, he says.
About your properties?
I don't know how his number got out there, but it's somehow out in the wild now. And people, they're just grasping at whatever they can, I guess.
Yeah. That's wild.
So it's done well. The only downside, or not downside, I guess, is like when we got it, we had a pretty high interest rate on it of like almost 5%. And I've been wanting to refi it or cash out refi or do something with it, but I was a little too slow with it last year. We were really close to doing it and like the costs were going to be too high. And now rates have gone up a bit, of course. So I think we're just going to leave it there. But all our other properties are much closer to like 3 to 3.5%, which we're happy about. This one, it's a little bit higher, but that's more of like a nitpick, not a major issue, I would say.
Totally. Chris, let's shift gears here because you've done something that I think a lot of people end up doing and you kind of became an accidental landlord. And in your instance, I don't know if it was accidental or premeditated, but talk to me a little bit about what that was like buying your first primary and then ultimately converting it to a rental. And did you know that you were going to convert it one day?
No, I don't think we did, honestly. I think so when I bought the condo initially before I was married. And my wife now, she hated that I did actually, because it was during like a down market and it was like 3% of my money. It was like all I could afford. And like, what if it goes south? So it was a little bit scary and a bit of a risk, but I was like very sure that this was the right decision to make. And like, I didn't think we'd turn that house into a rental at some point. And that was after we moved out, of course. Now, and then our first primer we bought together up in Redwood City was a great house and we loved it. And it ended up becoming a little too small. So we ended up moving out of that house. But while we were there, we decided, hey, let's experiment with something. Let's rent out part of the house. Let's just see if we could find people who are interested in doing that. And because we had like a kind of an awkward layout. We had an upstairs bedroom, our master bedroom, that was added on at some point. And then the downstairs was like a 2-bedroom, 1-bath situation where the kitchen is and all that. So the downstairs bedroom, this was before we had kids, was kind of unoccupied. So we ended up putting it up on Airbnb and seeing if anybody would be interested. And it was kind of slow for a while. We got a couple people interested here and there, mostly for business travel. And then after a while, we found somebody who was flying into Redwood City every week for work from Chicago. I don't know why he did this, but he took a job at a startup and his family was in Chicago and he wanted to have a regular place, not a hotel, like something cheaper. And I think we charged like $100 a night, maybe even like $90. And he came every week for like several months. And we were really happy. He would only come on like 4 nights a week. We'd barely see him. Mm-hmm. And then he'd fly out before the weekend. And it was great. And we made good money from that through Airbnb. And I think that just really showed us like, okay, like this is the power of like renting, especially like kind of hands off in a way. Sure, there's like cleaning and preparation involved, but we were not having to like manage a tenant or anything like that. Like he was on his own pretty much. And then I think that really got us thinking like, okay, maybe we should do more of this. So when we moved out of that house, we kept it as a rental for, I think it was 2 years we did. And that was a tough decision because we ended up buying the primary house that we're in today, which was substantially more. And we really wanted to use that equity from that previous house on the down payment. We decided to leave it there and figure out other creative ways to get our down payment through family and such. And then we realized like after 2 years, we could not do that anymore. So the rent
was it an Airbnb or long-term rent?
It was a long-term rental at that point.
Okay.
Yeah. So we found a 12-month, like a family that was in there for 2 12-month leases, and it was fine. It paid for the mortgage. But we were just too cash poor and we didn't feel good about that. So we ended up selling it and recouping a lot of the money from there. And we sold it soon enough so we could utilize the homeowner's exclusion on the gains, thankfully.
And what is that for someone who doesn't know?
Sure. It's so for married couples that you sell, let me see if I get this right. If you convert your primary to a rental, but if you lived in it for 3 out of 5 years, I think it is, you can claim an exemption up to $500K of gains, tax-free exemption, on gains you would have otherwise had to pay capital gains tax on. Did I get the number right? Is it 3 years?
I feel like it's 2 out of 5.
2 out of 5. Maybe it's
consult your tax professional before doing anything, but it's either 2 or 3. One of those.
Yeah. So that was part of our decision. We said, look, if we're going to get this because there was a significant gain there, we didn't want to pay tax on that. And so that factored into our decision too. But getting that exposure, I think this is, for folks thinking about like, is being a landlord right for me? Like, am I set up for this? Like the stresses or the risks of it. And I know you guys on Restock talk a lot about house hacking and like renting out part of your house. I think it is a good way to experiment and see if you're like really interested in doing more of this without like committing a large chunk of money into some other property somewhere where you don't know if you're going to feel okay about that and sleep at night.
That is such a good tip, Chris. And I love that. You really got to do it very tangentially or very kind of toe dipping as, hey, let's rent out a room. If it doesn't work, we stop renting it out. But if it does, great. That's awesome. And so you really got that firsthand experience almost risk-free because it wasn't like you needed that renter to make your mortgage payment. You bought the house kind of without that intention at the start, right?
Yeah, right. Exactly. We never even thought that would be possible when we started. And then sure, there's even other, I remember finding out about companies that allow you to rent out your garage space.
Really?
And we had a detached garage in our backyard. That's how a lot of the properties were in this neighborhood. And we rarely used it. And we never went through with that. But we thought, like if we're ever being a room in our house, maybe we rent out space in our garage for storage for people. And so there's ways to rent out everything nowadays, I suppose.
You can rent out your car.
You can rent your car. You can rent out your pool in your backyard for summer days. So there's very innovative ways to make money. Yeah. So that's been fun to learn. I think some of those things.
I love it. So now let's shift gears again because we covered kind of 0 to 1. Now I would love to hear how you and Jessica have gone from 1 to 3 and what the scaling mentality and mindset was and how did you get there? Was 1 to 2 to 3 easier than 0 to 1?
I think going from 0 to 1 was significant for us and took a while to get to that point of feeling comfortable. It probably took us a year, I would say, of the education, the research that we did, talking to people, figuring out areas and neighborhoods and things like that. And I think just to like go back to that for a second, like I think that's probably the position that most folks are in who are watching this and listening to this, is going to that 0 to 1 step. Like some of the things we thought about with what is important is we wanted to take a less risky first step. Like by committing first to even going and buying an out-of-state property as a risk, we wanted to de-risk it as much as possible by buying into a nicer neighborhood, buying into an area we knew would appreciate in the long term. Buying in, and what that means tactically is like, a 3.5 or 4-star plus neighborhood with good school ratings. We wanted to prioritize that too, because we have kids and we know families will look for neighborhoods that have decent school ratings. Cash flowing on day one was a requirement for us, and still is, like even going from 1 to 3 properties, putting at least 20% down to have some equity stake, some stability in the property should things go south. These were some of our requirements that we made sure, especially for our first property, that we still carried forward to our other 2 that we've purchased. And we really looked at these and looked at different ways. Like, okay, what if it's a 3-star? Like, what does that mean? And there's a difference. There's different cap rate. There's a different level of risk you're taking on that we just didn't really want to deal with that and open ourselves up to potential downsides of like tenants changing frequently, maintenance issues. So we tried to focus on higher quality properties. And then going from the scaling part that you're asking about, I think was really about thorough planning and using the 10-year plan that the template that Roofstock Academy offers as an example has worked really well for us to model out, okay, like how do we get the money, first of all, to put down payments on these houses, and how much cash flow that we expect from them? How long will it take to recoup, like to bank that cash flow and buy another property? So that's how we arrived at like the model of putting down like 30 to 35K a year every year, for example, to buy a property. Some of that would come from our own savings accounts, but also some of it was from collecting 200 to 250 a month of cash flow from the other properties we had. And building out that model helped us feel confident that, okay, there is a path to doing this. But it also involved, like, just very honestly speaking, a lot of time and, a lot of stress at times as well, while raising a family, while working a day job. And it took a while, I think, to build the confidence to keep going and to go beyond the one. So that's something to also keep in mind. I alluded to earlier, like the time involvement is it can be big if you want it to be big, or it can be small. Like there's ways to invest completely hands off and buy a REIT or buy something where you don't have to do anything. But the middle ground of owning the actual tangible property and feeling confident enough to go forward with it, I think it takes, everybody's different, but it takes some time to get up to that point. And more specifically there too, on like looking for mortgage lenders, shopping around for those, property managers, insurance brokers. Those are the types of things to consider when you start looking at other states and other areas. Thankfully, Roofstock provides a lot of recommended partners to work with in those areas, but most you'll want to do your own due diligence and make sure you are checking all the boxes in your own buy box and spreadsheet and such. And buy box, by the way, I know that's a academy term, but I'll explain quickly. Is basically it helped us a lot. It's documenting what are your requirements for buying a property, like what cash flow do you need, cap rate, neighborhood rating, down payment amount, etc. And you put a property through that, analyze it, and see if it comes out with yes or no, or how many no's. How many are you comfortable with proceeding on? So I know that was a lot to cover, but I'll put it there.
No, it's so good. No, so good, Chris. I'm curious as kind of a follow-up for those people that are interested in scaling, because I think there are a lot of people that went from 0 to 1 and maybe didn't have as positive as an experience as you did. Maybe they bought that less expensive property in a lesser star neighborhood because that was all they could get into. So for someone that didn't have a great experience, what do you say to them in terms of thinking about scaling?
Yeah, I think that's a great point. And I'm, by the way, I'm fully expecting that at some point we will like hit bumps in the road in our real estate journey, and we have had little bumps in certain areas, and there will be bigger ones down the road because that's just the reality of how real estate works. And I think, yeah, starting off and having a bad first experience can be demoralizing, right? And it can make people want to get out. I understand that. But I also think it's good to go back to what your own goals are. If your goals are focused around long-term buy and hold, I think you have time on your side, because there's plenty of data to show, the long-term up and to the right charts of real estate and where it's going. But if you were hoping to do something in the short term and that hasn't worked out, maybe think about a different strategy. Maybe think about investing in a different type of property or with a different amount of money, different neighborhood. That's what's great about real estate. There's so many different ways to get involved. Maybe the first approach you tried didn't work, but there could be 9 other ways, whether it's with yourself or with partners or with crowdfunding or with owning, pieces of a property instead of the whole thing. Things like that. There's different ways that you can get back in the game, so to speak. And I would just say that, don't let that fully ruin your view of what real estate can do for you and your family. The other thing too, like, honestly, is, you could take a break from it. I think folks could, there may be folks who invested too early and didn't have enough capital, and maybe a deal turned sideways and now you're underwater or something like that. Maybe it's a sign to wait and wait till, you have enough capital to re-enter, or the market turns around and you can do something with that money. But, yeah, I just keep going back to how there's so many different ways. It's a great, for me, I don't see myself as a very creative person, but I think real estate has allowed me and my wife to think of, like, what if we did this? What if we did that? Like, to give you that control to do things in a different
Totally.
way.
I love what you said about, maybe it's not the right methodology. There are these 9 other routes to go. Because I think too many people have a bad first experience, like, well, real estate's bad. Real estate investing sucks, not for me.
Yeah.
But I think...
Yeah, and it makes me think too, on that note, like, my father-in-law, he lives in the Bay Area too, and he bought a rental in Phoenix many years ago. And it was great. It worked for a while. And then a few years ago, he realized that supposedly the tenants were not paying rent, but in fact, the property manager was stealing the money or some portion of the money and pocketing it for themselves, which is a crazy story. I didn't even know that this could happen. So this happened for months, that the money was gone. And so the property manager was fired, the tenants left, and he decided to sell the property. He was tired of that experience and didn't want to be a landlord of property. He didn't want to own rental property anymore because of that one experience. And the rest of the years before that have been great. And I can understand how that could be a pretty negative moment, to be like, oh, this hard work and I lost all this income now. But also on the flip side, like, if he had kept that property, it'd be doing phenomenally now. So I think it just goes to show, for everybody's situation, it's unique. He was done with it at that point. He didn't want to do real estate anymore because of that one bad experience. Whereas for me, maybe I would look for, okay, maybe there's something I could do differently the next time. Maybe I should vet the property managers more, or just try a different company and see if it happens again. Something.
Yep. Like that. There was this poker player that wrote a book, and I forget what the book is called, but she was on the Bigger Pockets podcast, and she was talking about how in life she tries to apply this, that you evaluate the process, not the outcome. Because the processes you can control, the outcome oftentimes we can't. And so if something goes sideways or goes poorly, I think it's so important to kind of do a postmortem and say, okay, well, what did I do? And maybe what could I have done differently? Outcome is the outcome. Can't change that. But the process leading up to it, we might be able to influence a bit.
Exactly. Very true.
Awesome. Well, Chris, this was so much fun, man. I really appreciate you coming on. If people want to reach out to you, have more questions about your story, want to learn from you, what's the best way for them to get a hold of you?
Yeah, I'm definitely open to sharing more and chatting about real estate or other personal finance topics. Happy to have folks email me directly. And my email address is letter C and my last name, Meunier, cmeunier@ymail.com. So again, yeah, happy for folks to reach out, and always happy to talk real estate and other finance topics.
Awesome.
Yeah.
And can you spell Meunier for those who might not be familiar with the spelling?
Oh yeah, it's not obvious, is it? Yeah,
Depends who you ask.
Meunier.
Awesome. Awesome. Well, Chris, thanks again, man. I'm looking forward to seeing how things go for you in the future.
Thanks so much for having me, Michael. It's been a pleasure.
You got it. Talk soon.
All right. Bye.
All right, everyone, that was our episode. A big thank you to Chris for coming on and sharing his story. He's doing a lot of really cool things. And I think especially as any beginner out there listening to this should hopefully feel inspired that you can do it too. As always, if you like the episode, we love hearing from you, ratings and reviews on things we could do better or topics that you want to hear about. And we look forward to seeing you on the next one. Happy investing.